Of course, it's always going to be hard to find bargains in a market like this, but it is a stock picker's market now, Scott. I've talked about it every time we've gotten together, whether it's in the U.S. or what I'm thinking about is some things more globally. And if you're not actively a stock picker outside of the United States, take a look at EEM. Look at the emerging markets, down 10%. If you think about the U.S. and the trend that it's facing right now, guess what? There are a lot of multinational companies, there are a lot of global companies that are selling into these emerging markets, and that's going to bring them up right along with them.
All right, so let's kick that around then. Let's kick around the emerging markets, right? The U.S. has done so well. Amy, the rest of the world has lagged.
Right.
Emerging markets have gotten really upset. Is it time to start looking elsewhere, just given the run that we've had? I'd like to have a debate about all of your selections today.
Sure. We're not leaning into the emerging markets trade right now. They had a great year last year. They've given that back this year. We still think it's not the place to be. If the dollar keeps rising, which it looks like it will, they'll continue to get hurt.
Yeah. How about that, guys? I mean, it's a legit issue, right? The dollar, has obviously caused some concern.
Yes.
Of late. Now, maybe some of that has subsided a little bit. Certainly in the last week when I was gone, the euro started rising. Great timing, by the way. But you get my point.
But it didn't run away from you.
It didn't run away.
And you don't have to leave the U.S., Scott. Let me be clear with you. It's just there are places where you can find bargains across the globe.
Yeah, and I think, look, I think when you pull it back on a longer-term perspective, I think the emerging markets and placing an investment surrounding the fact that the emerging market consumer is going to emulate what the U.S. consumer might have done the last couple of years. Yeah, 3 to 5 year basis, absolutely. But let's talk about the here and now. The here and now, I agree with Amy. I think the opportunity source remains in the U.S. To your point as it relates to currency, but I think also more importantly, it's the emerging market debt story. And I think that's where there was a lot of leverage coming into this year. You had a lot of managers who were in the emerging market debt asset class, and I think you're seeing, obviously, because of the dollar, you're seeing a significant retrenchment in terms of the allocations there. So in the near term, I think the U.S. remains the place of opportunity. I think you had a rebound in the emerging markets on the belief that maybe some of the tariffs would be a little bit better.
John's looking for more. I mean, right? We saw you guys had unusual activity.
Yep.
I think it was yesterday. I think it was yesterday.
Yep, we had it last Friday, Judge. They were buying the 45 calls while you were enjoying the beach. And as the market rallied pretty significantly in the last 5 days, 2 weeks, let's say, the EEM is up, I think, 5 or 6%. Now, that's off of a very bad performance that Amy cited already. Will it continue? They're buying December calls, so I believe that the smart money is saying, yes, it will continue. But there are certain select ones in there, to your point, Kourtney, about stock pickers, absolutely, because of the debt. Some of these countries with debt that are extreme versus their GDP, they're going to have big problems paying back. Now, countries like South Korea that are in the EEM, not so much. Countries like Turkey, impossible. Yeah, these are going to be bailouts similar, perhaps, to what we saw Russia when they had to get bailed.